Hi, this is Gautam. Welcome back. If you give me 35 minutes of your time, not at a stretch, but in pockets, okay, then I'll make an honest effort to help you understand a balance sheet and the various line items that make up a balance sheet. Okay? So, what I've done is I've broken the 35 minutes of explanation into 4 videos. In the first video, we look at the first subsection of the balance sheet. In the second video, we look at the second subsection of the balance sheet, so on and so forth. So if you give me 35 minutes, then I'm confident you can understand pretty much any balance sheet. Okay? I'm not talking about financial services, okay? But I'm confident that pretty much you can understand any balance sheet apart from financial services. Okay. So are you ready? Can I have that 35 minutes of time commitment from your side? Okay. All right. So before we begin, first, let's understand what is a balance sheet. A balance sheet is a financial statement that shows a company's financial position at a specific point in time. Okay? It provides a snapshot of what a company owns, yani ke assets, what it owes, any udhari, any liability, okay, and the owner's equity. So liability and equity together, they form the sources of funds. मतलब जहां से पैसा आता है. Okay, right? These sources of funds, that is equity and liability, they are used to build assets. Okay, मतलब building या machines या equipment जो भी plant, equity and liability, sources of funds are used to build assets. Okay, in other words, these sources of funds are used in application of funds. Application of funds, money in building assets. Okay, so what will I do is I will take you through the balance sheet of a hospital, which is Narayana Hrudayalaya. Okay, so in video 1 and 2, we will understand assets and the various line items in the asset side of a balance sheet. Okay. In video 3 and 4, we'll understand equity and liability. Matlab, we'll understand the sources of funds in video 3 and 4. Okay. Now, so let's begin with video 1. Okay. Okay. So in this document, what I've done is I have pulled in the financial statements, the balance sheet, the P&L, and the cash flow for this company. I've pulled in the last 6 years worth of financials of this company from its annual reports. That's what I've done. Okay. All right. And also, what I've done is I've also pulled in the notes as well. Notes and notes description. See, in the annual report, okay, there is a section on financial statements. And within the financial statement section, there is notes to financial statements. Okay. It's very, very important that we read through the notes to financial statements. Okay. And how I do that? Okay. I pull the notes here. Okay. And I recommend that you do the same. You also pull in the notes from the notes to the financial statement subsection of the annual report. Please, wo karna padega, wo karna chahiye, because this will force you. This will force you to read through the notes. Okay. So any which ways, let's just first sift through the balance sheet, and we'll also go through each and every line item of the balance sheet. Okay, to get a sense of what all these line items are. Okay. All right. So let's do that. See, so a balance sheet, as we saw yesterday, it has one section is source of funds. In the source of funds, they have equity and liabilities. I know all of you know that. And then there is an application of funds or the asset side. Okay. All right. There are two sections. Okay. Now let's start with this application of fund. Within the application of fund, there is something called net property, plant, and equipment. What net PPP is really is, okay, it has a dollar value, or rather the rupee value in our case, it has a rupee value of the number of years of useful life that is left. Okay. So let's say they bought, let's say, a building 15 years ago. Okay. All right. Now the building, or rather, let's say the useful life of the building is 15 years. Okay. They have been, I'm just making it up. And the building has been in operation for 5 years until now. Okay. So this line item and all this business has is just one building. Okay. So the useful life of the building is 15 years. They started the building 5 years ago. So this line item, this net PPE, will tell you, okay, that what is the rupee value, okay, of the useful life remaining of that building. The useful life that is left of the building is 10 years, right? So this dollar value, this rupee value will tell you कि अच्छा 2019 में, okay, this was the rupee value of the 10 years worth of useful life that was left. Or rather, in industry, another word that is used for this line item is outstanding depreciation. Don't get confused. I'm telling you, when you join a workforce, okay, or let's say you talk with seasoned investors, in their conversations, they'll use word like Acha. What is the outstanding depreciation? You know what they're talking about? They're talking about this line item net PPE. That's what they're talking about. I'm just trying to make you acquaint with the lingo that is used. And okay, outstanding depreciation, because जैसे 10 years elapse हो जाएंगे तो ये line items चला जाएगा, zero हो जाएगा. Anyways, all right, okay, all right. So net PPE, all right, you see net PPE was 70. Oh, by the way, everything is in millions here. Everything is in millions rupees. Okay, all right. Anyways, so if you see net PPE has increased from 17,000 to 21,000, almost 22,000. But if you see in the first 4 years, no, it is actually depleting. In fact, it's depleted in 2021. It's kind of range bound in the first 4 years, and then suddenly it has increased. Okay? Can you tell me why is it range bound, or why is there a depletion in the net PPE?
Well, can I?
Yes,
Uh,
please. Yeah.
yes. So the depletion could be first due to depreciation, right? Depreciation accumulating throughout the
Yeah.
2019 to
Yeah.
2020, I would say 2021 period, right? Another factor could be they are selling off a part of that property, plant, and equipment.
Yeah. Of
Not
course.
adding, not adding, but
Yes.
basically
Yeah.
the selling is greater than the additions in
Yeah.
the that
Yes.
property, plant, and equipment.
Absolutely. Both of the two factors could be playing out. Okay. So when they are not adding capacity, okay, so depreciation is going to eat up your property, plant, and equipment. All right. Okay. And also the second reason also could be what he said, whole lot. That is what we saw in the annual report as well. Mr. CEO was talking about. Okay. And you see it here. Abhi, right. And see, another thing that I do usually is, all right, before that, they also have something called intangibles as well. Intangibles and goodwill. And see, so what is intangibles in the case of hospital? Intangible and goodwill. What is intangible? Of course, this is a tangible asset. What is intangible asset in the case of a hospital? Yeah.
Licenses, maybe licenses to operate.
Huh, matlab it could be, yeah. So it could be, see, if you see goodwill, there's a line item goodwill. You see, goodwill has increased uh, almost twofold in year 2023. Year 2023 May, it has increased twofold. What is goodwill? When a company acquires a business or an asset, okay, and it overpays for that business or overpays for that asset, the overpayment is called goodwill on the books of the acquirer. I repeat, when a company acquires a business or an asset and it overpays for that acquisition, the overpayment appears as an intangible asset called goodwill in the books of the acquirer. तो यहाँ पे हमें क्या पता लग रहा है कि this hospital acquired another hospital, and I put in a note. That's why note helps you. In 2023, they acquired a ortho and trauma hospital in Bangalore. Okay, and of course they overpaid for it. That's why the goodwill has increased twofold. Okay, and then you see intangible asset में why the ठीक है, hospital को acquire किया, acquisition of the hospital resulted in goodwill, and it would have increased the net PPE as well. Okay, but why did this intangible increased? Why did this intangible increased? Okay, again I looked at the notes. That's how notes help you, because I was curious. Because first I thought why the intangible is increasing. The reason why it increased is because see, usually what happens is this is very typical. Usually what happens is when you acquire a competing business, okay, then many a times you pay the owners an extra amount and tell them that hey, you know what, you cannot enter this business for the next 5 years or 10 years, or you cannot do the same business in this area. So they force them, or it may be amicable, we do not know, but they basically sign a contract on non-compete and non-solicit. The contract is called non-compete and non-solicit. They make them say कि भैया ये काम आप नहीं कर सकते अभी. Okay, so that payment appears as a non-compete and non-solicit intangible asset on the books of the acquirer, because you have to justify the overpayment, right? So that's how it appears. Okay, all right. So that's why the intangible has increased as well. So any which way, so what when I actually look at these intangible and goodwill, you know what I do? Okay, I compute the percentage of, sorry, I compute ki, how much of my balance sheet is intangible and goodwill. I need to get a sense. I need to get a sense of that. Okay. So you see, so what I've done is I've added the intangible and the goodwill and divided it by the total number of assets. ठीक है. तो what it means is कि only 4.5% of the balance sheet is intangible and goodwill, which is fine, which is very typical, I would say, for a hospital. But if we were, let's say, analyzing, let's say, a enterprise software firm like Microsoft, SAP, okay, all right, or any other business, you would see the intangible and goodwill make a significant portion of the assets. Okay, what does it mean? इसका मतलब क्या है? What does it mean? Of course, not only enterprise software firms, any firm that is on an acquisition spree, that is used to growing inorganically, no, they'll have huge amount of intangible and goodwills in their books. इसका मतलब ये है, it gives you a sense कि let's say in the hypothetical, it may not happen, but in the hypothetical event of a liquidation of this business, okay, you may not be able to liquidate the goodwill or the intangible portion. I'm not saying that you may not be able to at all, but you will struggle to liquidate this portion, okay, because that's intangible. Buildings may, yeah, you may get, some portion, yeah, you may get, it may take time, but you may get, that's a tangible asset, you may be able to sell it off, okay, in the hypothetical event of a liquidation. But if your intangible is huge, then that is how you should look at it. Of course, I'm talking about a hypothetical event. At times you struggle to liquidate goodwill and intangible, because as I said, that's an intangible asset. Okay, so it's 4.5% right now, so that's a small number, honestly. Okay, let's move forward. There's ROU. I'm going to sidestep ROU for now. I'm going to spend a lot of time on ROU later, but I'm going to sidestep it for now. Okay, in the interest of time, but I'll certainly come back to it, and I'll spend a lot of time on ROU and lease liabilities. All right, so now let's move forward. There is something called financial assets. In the financial assets, they have investments, they have loans, they have other financial assets. Okay, so in fact, let me just do this. Sorry, let me just hide this. This is distracting. Yeah, all right. What is loan, by the way? That means my notes tell me that they gave a loan to some hospital. We need to explore कि किसको क्या loan दिया है. You see, okay, in 2023, they gave loan worth of 82 CR or 820 million. So we need to explore, find out कि although this is a small number, okay, but they gave a loan to some hospital. That's what my note tells me. And we need to do another round of due diligence as to what this loan was for. Right now, this amount is small, so I'm not going to break my head over it. But if this amount would have been high, then I would have certainly, what is this amount? So how I decide whether this amount is small or big? Usually as a general rule, if anything is, let's say, below 1% or 2% of the balance sheet, don't break your head into it. Please don't do that. My boss keeps on reminding me that if you are overly focused on the trees, and I'm quoting him verbatim, he says that if you are overly focused on the trees, you lose sight of the forest. Okay, so what he means to say is, if something is too small in the grand scheme of things, don't break your head over it, because you're losing the script. Don't sweat the small stuff. Okay, but again, had this been a huge number, yeah, तो मेरे को पता करना है कि किसको क्या लोन दिया, इसका रीजन क्या है. And are the analysts during the con calls, are they asking questions on this loan? All right, so any which ways, let me move forward. Okay, other financial assets, There is security deposits. Okay, security deposits. See, so basically, other financial assets would be security deposits or rent deposits. So what it means is, ki this is as part of a business. At times, they are required to give some security for something. That's the normal course of business. And again, this number is like 56 CR. This is a small number. Okay, and it could be other things as well. I've noted them here. It could be security deposits or rent deposits, long-term deposit with banks. So it could be anything, any of those things. So in this case, it's mostly security deposits. Okay. Income tax assets. Please keep in mind, in the Cayman Islands, there is no corporate tax. The corporate tax in Cayman Island is zero. That's one reason why investors are very excited. And they keep on asking them, ki, are you expanding in Cayman Islands? Because there is no tax. Like in Dubai, there is no tax. In Cayman Island, there is no corporate tax. Okay. So all these tax assets are for their India operations. This is a consolidated balance sheet. Lekin tax is limited to India. So usually they pay advance income tax. So that appears as a advance payment of income tax appears as an asset in the asset side. Then the next one is other non-current assets. In other non-current assets, typically you have capital advances. Capital advances, matlab, you see the capital advances, they have increased manifold in 2024. Iska matlab, see, because they are getting these new hospital construction going on, right? Okay. So what they have done is they are paying to building developer or hospital developers. So of course they have to pay those guys in advance, right? So that is what this amount is. And again, that's why investors are getting excited, as I said, right? Because whenever a company comes up with new capex plans, right, investors get excited. कि अच्छा ठीक है, capex होगा, growth होगा, so let's jump in. So so any which way, so other non-current assets is the capital advances. And in other companies, it may not just be capital advances, it may be other things as well, like I've noted here. It may be some other prepaid expenses, some balance with government authorities. So all of those are part of your non-current assets. Non-current matlab, what is non-current? Ki, uh, the life is not restricted to 1 year. It will go beyond 1 year. That is the basically the crude way of explaining the difference between current and non-current. Non-current typically would go beyond 1 year. Current assets, of course, current assets, technically what current assets mean? That you can liquidate them for cash within 1 year because they are involved in your day-to-day operations. Okay. Non-current may not be, the benefit of non-current assets is not restricted to 1 year. It goes beyond 1 year at the risk of repeating myself. Okay. All right. Now मैंने कुछ delete किया क्या? Okay. All right. So any which ways, you see non-current assets, they form what portion of the balance sheet? They form around 65% of the balance sheet. Okay. I'm just trying to get a sense of the size and scale of this business.